So, YouTube, welcome back. CalFX here. So in today's video, we're going to talk about entry types. And pretty much we will just go over how and when we can enter our trades, certain confluences we need to see before we take a trade. And later on in the video, we will do a chart walkthrough pretty much just to solidify all the concepts that will be talked about very shortly, right? So before I get into the video, guys, I got to do the YouTube disclaimer stuff. I'm not a financial advisor. Any topic discussed here is based upon my own experience and my deep understanding of smart money concepts. So after you watch this video, make sure you backtest all the concepts discussed here, forward test it using a demo account. And if you're happy with the results, then you can actually try on a live account, all right? All right, let's get into the video. So in today's video, we'll go over entry types. And the reason for that is because in the previous videos, we actually talked about order blocks and market structure, right? So now it's kind of important to pretty much understand how we can take advantage of the market's current structure flow, right? And by that, I mean, for example, let's say the structure is bearish on a high time frame, right? So pretty much we just want to find how and when we can enter, we can join that move, right? And actually take advantage of opportunities that the market can present, right? So we actually, when it comes to entry types, we actually have three types of entries, right? We have the risk entry, we have the confirmation entry, and we have the confirmation within confirmation entry. Now, for this particular video, I'll mainly touch on the risk entries and the confirmation entries, right? And the reason for that is because the confirmation entries, they need a little bit of more confluences when it comes to execution. So I actually make, probably on the future, I'll make a specific video for the confirmation within confirmation entry. But for this particular video, I'll actually touch upon the risk entry and confirmation entry. So by risk entry, what I mean about it is, for example, we can clearly see on this schematic, let's say this is a 1 hour, right? If hypothetically, let's say this is a 1 hour a structure flow. We can clearly see the structure here is bearish. We have this price pretty much violating the lows, protecting the highs, keeping that bearish order flow intact. So we have the first break, we have a mitigation, we have the second break. Now we can clearly see here that the structure, right? I mean, the order flow is bearish, right? So our expectation of order flow pretty much is to see price actually coming back into the order block that was responsible for taking out the previous low, and then take out this 1 hour previous low sitting right here. So a risk entry would be, let's say you on the 1 hour, we actually see this break of structure, and then you set a limit order, right? So this actually will be a risk entry. Now, when you come into the confirmation entries, right? When you come into the confirmation entries, pretty much we want to see on the lower time frame inside the 1 hour OB, we want to see the structure shift, right? We want to see, it can be, for example, 5 minutes. We want to see that 5 minute structure shift, pretty much telling us that this 1 hour POI is holding, right? So now we can actually go, we can actually have a better strike rate, even a better risk to reward ratio, right? So what I mean by that, for example, is let's say, for example, structure was bearish on the 1 hour, right? And then you have this change of character right here. Now, as we know from the previous video, right, the market structure, we know that the change of character is never a confirmation of trend shift, right? It's only the first sign of, for example, in this scenario, it's just the first sign of bullish intention. So now a risk entry would be if you only set your limit order in this order block and actually looked for price to continue to move to the upside. Now, in this scenario, this actually is a risk entry because you don't have no confirmation that this POI can hold, because price can just come here, react to this order block, and then carry on the move to the downside. And that actually, that's something that happens a lot on the markets, right? So we want to be able to have the odds on our favor, right? So what we can do, for example, let's say this is a 1 hour change of character, right? What we can do is we can come to 5 minute time frame, wait for that 5 minute structure. It can be the first break. If it's clean, if the first break of structure is very clean, has a huge momentum, we can take the first break of structure. But to increase the probability, we can just wait for price to mitigate, look for the second break of structure, and we can take the trade, right? So this right here would be a confirmation entry inside this 1 hour change of character. Now, what are the confluences that we need to see in order to take a trade? Now, there are three confluences that we want to see. Let me just erase this right here. So just a moment. Okay. So what are the confluences we need to see when it comes to entries? There are three confluences that are very important when it comes to entries. Is we want to have a clean OB to trade from on the break of structure, right? So price break structure, we want to have a clean OB to trade from. That's number one. Number two, we want to have huge momentum on the break, pretty much showing that institutions were involved at that particular time, right? So that's the footprint. So we want to have, number one, let's repeat it, is we want to have a clean OB to trade from. Number two, we want to have huge momentum on the break. Number three, we want to have imbalances, right? So when we have these imbalances, right, after price break structure to downside, that means that there was no buyers to counter that sell move, right? So we can clearly see that the momentum now is on our favor for us to take a sell, right? Because we have this strong bearish momentum. So there are three confluences: clean OB to trade from, huge momentum of volume, and we want to have imbalances close to the POI, right? So those are the three confluences. I hope you guys take note of this, right? Three confluences we need, right? So whether you're going to take the risk entry or the confirmation entry, we need to have those three confluences. Number one, a clean OB to trade from, huge momentum on the break, and imbalances, right? We want to see that fair value gap, right? So when it comes to entries, pretty much that's the simple concept of entries, right? We have the risk, the confirmation entries. And right now, let's hop on a trade that actually one of my students actually caught on the group. Actually, let me just show you right here. So he actually caught this trade. This was a GJ trade. He actually caught on the 1 minute time frame. He actually used the confirmation entry. We can clearly see the change of character here and the entry, where he had his entry. So on this particular video, we're going to talk about this GJ trade, right? So we can clearly see that if we go, if we go to GJ, right, on the daily time frame, we can clearly see that on the daily price is bullish, right? We can clearly see that we had this swing low and swing high. Price came back, mitigated the PY, and then pushed to the upside. So we can clearly see that right here from a daily time frame, price actually is bullish, right? GJ is bullish. Now we can clearly see that we have this extreme order block. The reason why I'm at this order block is because we can clearly see that there was imbalances still left at this POI, even though price actually reacted to this decisional down candle before the up move that went on to take this previous high, right? So pretty much we had this, and this actually can be a inducement, right? We never know, right? Price can just keep pushing to the upside, right? Because it just came to below 50% discount of this range low and high. So it's totally fine if price actually pushes to the upside. But actually, I'm actually keeping this order block right here because we still have imbalances left right here. So there is a possibility that price can just take out these lows and push to the downside. But for the sake of this video, we actually have this break of structure, which was the trade that it took. So the understanding behind the trade is that we had this push to the upside, this break of structure. We can clearly see that this is a change of this is an internal change of character inside that daily range low and high. So we can clearly see the price actually broke structure to the upside, taking out this previous high, and we have the order block right here. So now, what is our expectation of order flow when you have price actually breaking structure to the upside? You have the order block right here. What do we expect? We expect price to do a pullback, right, which is the bearish order flow towards this daily POI, or it can be a 1 hour, right? But we're waiting to see that bearish order flow on the lower time frame, so we can pretty much take the trade, right? We can actually do a counter trend trading, right? But counter trend, they need to have certain confluences, right? We need to see the structure shift on the lower time frame, pretty much price telling us that, okay, now we're doing a pullback towards this higher time frame POI, right? So on the lower time frame, we want to see the structure shift, right? Pretty much price trying bearish. Then we can actually take a trade from this POI all the way down to this order block, right? Now, a risk entry from the daily time frame will be you setting a limit order at this order block right here. So that's a risk entry because we don't have a confirmation if this order block will hold, right? But for the sake of the trade that the student actually took, we can actually go to, he actually took the trade off the counter trend, right? Pretty much he was just trying to ride the bearish order flow towards this daily POI. So we can clearly see that we have the daily POI, right? Push to the upside. We have an order block right here. So we want to go to lower time frame to see how we can ride the bearish order flow towards this order block. And this actually is for people that have time to be on the charts, right? So they don't want to wait for price to come to the daily, because sometimes this can take weeks for price to come to your order block before it actually continues to move to the upside. So if you want to take advantage of the lower time frame opportunities, you can actually go down to lower time frames, look for that bearish order flow transition, so you can ride the bearish order flow towards your higher time frame bullish POI. So let's hop on the 1 hour, right? And let's read price action from the 1 hour time frame. We can clearly see that right here we have, if we mark the swing structure, all of these breaks of structures that you're seeing right here, all of this is what we consider internal structure, right? We actually made a video on this, on the market structure video. I actually pop up a video right here so you can watch it. It's very important, right? We need to understand the difference between swing structures and internal structures. So I actually pop up a video right here so you can actually watch that. So we can clearly see that from the 1 hour, what is our swing high? We have this swing, we had this swing high, we had this low, then price actually made this high. Then this actually was the reaction right here at this extreme demand zone right here. Then we had the break of structure right here. Price broke structure here. Price pretty much mitigated this decisional up candle before the down move that went on to take this swing low right here. So we can clearly see the price actually came back to mitigate the POI. Then we had the second break. So pretty much we had that clean structure shift on the lower time frame, especially from the 1 hour. And if you look at the swing high, right? Because we had this low that made this high right here. And now price actually took out this low at this particular moment right here. We can clearly see the last up candle before the down move that went on to take this previous low. We had price actually coming back, right? So we can clearly see the price actually came back right here to mitigate that order block. And then we had the second break. So now we can clearly see that structure shift on the lower time frame, pretty much telling us that, okay, price is now ready to come back to that daily bullish POI and probably see the move to the upside, right? So my student actually had this 1 hour POI right here. Now, what would be a risk entry? A risk entry would have been you setting a limit order right here at this 1 hour order block. And the reason for that is because there is no confirmation that this POI will hold, right? Price could just push to the upside and then come back down later, right? So as a mean to just increase our strike rate and have a much better risk to reward ratio, we would have to go down to lower time frame. So let's say you have this 1 hour break of structure to the downside, price comes back into our POI. So what do? We can either go to 3 minutes, 5 minute time frame, or 1 minute. So let's go to 1 minute time frame to see how we could have entered this trade. So we can clearly see, let me just push price to the left. So price here processing the data. Okay, so price actually tapped our POI, right? So as we know, a change of character is never a confirmation of trend shift. It's just the first sign of reversal. So after the second break of structure, that's when we have the trend, the order flow transition. Pretty much if price was bullish, after 2 breaks of structure to the downside, we have that confirmation of bearish reversal, right? Pretty much price going from bullish to bearish. So in this particular scenario, soon price actually tapped the POI. We can clearly see that price actually had this low, had this high, then low, then this high. We can clearly see that price actually failed to close below that low. So this actually was a chalk, but because we don't like to take the chalk as a confirmation, as an entry, right? Because it doesn't hold the best probabilities. We will need to see a second break of structure. So we didn't have a second break. We actually saw price actually taking out the low right here. So this is a great example why sometimes the chalk can be a fake out, right? Because you have this break right here. Some people would have set a limit order right here, right? So we need to see that 2 breaks of structure pretty much to give us a better confirmation that the trend is shifted in the lower time frame and this higher time frame POI is holding. So what do we see right here? Price actually took out this previous high right here. We can clearly see the price took out this high. Now the question is, what was responsible for what actually created this new high? What was responsible for taking out the previous high? It was this internal low right here. We can clearly see this low right here. That was the pullback, pretty much a reaction after price reacted to this supply zone right here of the chalk right here. So pretty much price reacted, pulled back, then we had a violation. So this low was the decisional, right? Pretty much was that this was the low that took out the previous high. So right here, we can clearly see that we had the first break of structure, pretty much the change of character happening right here. So we had the change of character. Now, what is the order block? Is sitting right here, the last up candle before the down move that went out to take that low. Now, this right here is the first entry, right? This is the risk entry, the chalk entry, right? So if because we want to increase our strike rate, we will actually need to see the second break of structure. So we can clearly see the price actually broke structure right here, right? And this actually was just weak breaks. Actually, I don't consider weak breaks as a break of structure because most of the times they're not reliable, right? It just seems like a sweep, right? Price actually failed to close below this low. So we can clearly see that only after this break and body closure, that's when we had the second break of structure, right? So right here, we can clearly see that we had this last up candle before the down move that went on to take. And what are the three confluences we need to see that we actually talked about before? Number one, we want to have clean OB to trade from. We want to have huge momentum on the break, and we want to have imbalances left, right? So what do? We actually set this right here as our order block to trade from, right? So we can clearly see that we will you can just set your limit order right here because on the 1 minute we had the two breaks of structure, pretty much a confirmation of order flow transition, right? We have transitioned from bullish to bearish. We have this huge momentum, pretty much giving us a signal that the institution want to push price to the downside, right? We look at the momentum and look at the candles, how many candles it took to push price to this low, and look at this move right here. You can clearly see that we have more candles on the pullback than on the impulse. So we can clearly see that here, the momentum, the confluences are more in our favor, right? So this right here could have been your entry, right? Just give a 5 pip, just to give a round number and a nice buffer to the order block, right? And now, what is the higher time frame? What is your target? As a scalp target, you can just target this 1 minute previous low right here. So this would have given you about 1 to 8 risk to reward ratio. But following the higher time frame directional bias, right, and the expectational order flow, we can actually go down, for example, to, let me just go to 15 minutes. Okay, so 15 minutes. We know that we actually had this 1 hour previous high and low. So if price is going to continue that bearish order flow on the lower time frame, what do we expect? Price to take out at least this previous low, right? This 1 hour previous low. So this should be your target. And we know that price has to come to that daily bullish order block, pretty much to see if price will continue to the upside, right? So this right here, this daily OB would have been your target. So as you guys can clearly see, this would have been a beautiful trade right here. This would have been a 37 RR. I personally didn't take this trade. I don't trade GJ, but for educational purposes, you guys can clearly see what is the difference of risk entry. If you took a risk entry, for example, from the 15 minute alone, right? You would have to use a 30 pip stop loss, and you would have to target this daily OB. It would have been a 1 to 5, which is not that bad. I mean, for people that have a 9 to 5, they don't have the time to be on the chart. This would have been a beautiful trade, right? 5 RR, that's beautiful, right? But for people that want to pretty much increase the strike rate and have a better risk to reward ratio, this would have been a beautiful one, all right? So guys, I'm gonna end the video right here. So if you guys enjoyed the video, do me this favor, right? Just hit the like button and give me a subscribe, right? If you're new to the channel, and actually leave a comment down below pretty much so I can see if you guys really enjoyed the video, and you guys can recommend me any other video that you guys would love to see. I'll actually make that happen. So that's it, guys. I see you guys next time.